Well, hello again, traders, and welcome out. This is Ankit from Maverick Currencies here, and we're back with another update on the Canadian dollar outlook. Again, this morning we had the Canadian CPI, which we were actually watching, and as we see the numbers were actually negative. Surprisingly, we did see more weakness as expected. So this is where the Canadian dollar could be at a cross point of making a shift, because these CPI numbers are important. If the numbers coming softer, which means the central bank then has less pressure to raise rates. On the other hand, if the inflation is running very hot, then the central banks has to be a lot more hawkish. So that's really the story that's really playing out. And we can see that the Canadian dollar has been one of the better outperforming currency this year, comparing it to some of the other growth currencies like the Australian dollar or the New Zealand dollar. This currency has really held in well so far this year, and that's again because of the hawkish the Bank of Canada. And right now, with this little soft numbers, we can see the initial price action was a bit more to the downside. So if you take a look at a shorter term chart here, we can see that right off the bat, as the numbers came out, we saw some weakness. And we pretty much saw weakness across the board during the day today. So we're looking at a Canadian dollar basket. If we take a look at any Canadian dollar crosses, we'll probably see the exact same story. And that's really where Canadian dollar weakness was really in play. So how do we position ourselves for the Canadian dollar, or should we make a bit of a change with our outlook, because we have almost played Canadian dollar to the upside, and as you can see on the chart here, we are now touching that upward trend line. So if the break of that trend line comes in, I think there's a little bit more further downside risk in the CAD, a little bit more profit taking as we start to see some hawkish bets comes off for Bank of Canada to even raise more of a hawkish rate the next time. So if the Canadian dollar has a bit of a pulling back to do, I think there's enough good opportunity to kind of pay attention to. If you look at the curve over here, we are actually slowing down that higher highs that we've seen. I mean, you can see pretty much the big move was really from March till June. And after that, like this has been holding relatively well, but the curve is slowly slowing down. So I think what we need to focus is if this start to actually move lower, and ultimately this previous low would be the ultimate test, the August lows. If this breaks lower, I think the CAD could experience some more further weakness. And again, this is where some of the premium is holding. You know, this is where we could see some sort of selling coming in, because everything else looks pretty weak. So you start to see some relatively stronger currencies start to get hammered down a little bit here. So again, that's the idea, but we'll have to kind of wait and see and follow relative strength of weakness and see if this kind of price action continues. So if we take a look at a 4-hour chart, you can see that it's pretty much crisscross between these moving averages. We are right at below this 200-day moving average, below the 20 to 50. I think at this point, break of this trend line is start to look a little bit more bearish to me. And if that's the case, then we have to really pay attention to Canadian dollar crosses across the board, not just against the dollar, not against the yen, but everything else. So let's just start with the dollar CAD. And again, dollar CAD has been the currency pair have been very resilient. As you can see, the entire summer has been in a wide range, but hasn't really broken out. And here we are breaking out higher. So at this point, I mean, we have some very important resistance level. If I have to draw some line here, I mean, this is where the next level resistance is at about 134. If we can get above that 134, I think a 135 to 136 is easy target. But not only just the Canadian dollar against the US dollar, let's see how the Canadian dollar looks against other currencies. So we have CAD against the yen, which again is also one of the currencies that I'm paying attention to. And as you can see that we are now touching this prior breakout point, which is now a support. So we have this support level, resistance level right here, which is now the support. If it breaks this level below, it starts sitting at 107.53. I think we can easily see this actually weaken further to the downside. Again, if your rule is to not short something if it stays above the 20, the 50, then I think we have to just take a look at 106 as an ultimate support line. If it gets below that, about 150 pips away from where we are right now, I think this can have a little bit more further downside risk on the CAD yen as well. Other crosses that we can pay attention to is currency crosses like Aussie CAD. Again, big divergences between Aussie CAD versus and the Kiwi CAD. You can see that on a weekly chart. We have been pretty much straight on declining throughout this year. So if I take a look at a daily chart, I mean, we could start to see a bit of a, I mean, this thing has ran up nicely, pulled back. It's trying to make a bit of a run again. So it's getting above the 20 to 50. And remember, if this Aussie and or start to outperform against the CAD, then that's a clear signal that the CAD likely to be weaker in the coming weeks. So a lot of choppy price action here in this Aussie CAD cross. But as you can see on a daily chart, if we can start to gain some levels, I think we can easily aim towards this 91, which will be an ultimate level of resistance. Kiwi has been underperforming this week, but let's just take a look at Kiwi CAD. And same thing, Kiwi CAD, you can see that divergence. 2022, I mean, that's a huge divergence between Kiwi against the CAD. You can see it's down about 11%. So huge move down there. Getting a bit of a reversal candle today, but nothing too exciting on a 4-hour chart. Just getting a little bit of a bounce here. But I think Aussie CAD likely to be a little bit better candidate there. Now let's take a look at other pairs that we can pair CAD with. Euro CAD, I discussed that yesterday. I like the Euro CAD going forward. Again, it cleared out the resistance level at about 132 to 132.50 here. So at this point, you can see the moving averages are curving, and we are trying to get above this level here. So I think the next level of resistance is at 134. And if you can get above that 134, the next resistance level will be about 137. So as you can see, the Canadian dollar looks actually good as far as the risk reward goes on a lot of these pairs. Now, the only thing that we really need to see is that consistency, because a lot of times in the past, you know, anybody that's been trying to short the CAD has been getting burnt because it just keeps rallying. So if it really fails ultimately and stays weak, I think there will be a better opportunity more to the short side. So we'll have to wait and see what the US, the FOMC and how the US dollar do tomorrow. But dollar CAD goes on the top of the list. If you're taking a look at Canadian dollar crosses, for Bank of Japan, I do like CAD yen as a short, especially if there is any talks of intervention. And we've seen the yen actually has been holding it really well in the past, since the past week, after the speculation start to kind of surface about about an intervention coming in place. So you can see that the yen is way off the lows and sitting right there at this little congestion point here. So I'm paying attention to CAD across the board. Like I said, we are looking at this as a whole. This currency has done really well, and with this weaker CPI, I think it is going to put some little bit more pressure to the downside. I mean, correlations are not really big at play, but I know some traders look at a correlation with the oil. You can see the oil is down as well. CAD has, outperformed, held in really well. So there's an opportunity there. It's just a matter of finding the consistency and finding a follow through. So today's price action is good to have, but I think what we're looking for is a follow through. So maybe some more consolidation overnight, and ultimately looking for a complete break of this and actually go lower. That will give us a confirmation that CAD's move actually is done for the short term. Thanks for joining. See you guys in the next episode.